Hi everyone, back again to me, and in this video, like usually before, I will read some article again. And before I start, don't forget to like, comment, and subscribe. Don't forget to share too. And in this article by Lawrence Levin, Reuters US stock fell and the dollar rose on Friday, even as Treasury yields gained, with traders anxious about inflation and what the Federal Reserve will do to combat it. With higher rates looming, large technology stocks such as Amazon.com Inc. and Alphabet Inc. fell more than 2%. Major banks such as JP Morgan Chase and Co. Bank of America Corp. and Deutsche Bank AG declined more than 2%. A reversal of the sector late summer rebound in an earnings miss by heavy equipment market deal and CO added to risk of mood. The Dow Jones Industrial Average fell 0.86% to 33. The S&P 500 lost 1.29% to 4, and the Nasdaq Composite dropped about 2% to 12. European share fell on Friday and posted a weekly loss as the highest ever jump in German consumer price in July added to gloom over economic outlook. The pan-European stock 600 ended 0.8% lower. The MSCI World Equity Index, which tracks share in 47 countries, was down 1.3% when market participants start to return from their holiday and look back. They will find central banks still far from having achieved their goals of reining in inflation. ING rate strategists said in a note to clients. That means a continued tussle between central bank tightening expectation and recession fears. U.S. central bank officials have a lot of time still before they need to decide how large an interest rate increase to above that their September 20 till 21 policy meeting. Richmond Federal Reserve President Thomas Berkin said on Friday, but more hawkish Fed official comments on Thursday helped push the dollar index up on Friday around 0.5%, a one-month high. The euro was down 0.44% at $1. US Treasury yields also rose on Friday, mimicking European bonds on sell-off on inflationary fears. The US benchmark 10-year Treasury yields rose to a month high of 2%, just shy of the 3% threshold it crossed in May for the first time since 2018. As investors worried about the U.S. Federal Reserve plan to tighten monetary conditions. Next week, investors will be paying close attention to minutes from the European Central Bank's July meeting, as well as comments by Fed Chair Jerome Powell when he addressed the annual Global Central Banking Conference in Jackson Hole, Wyoming on August 26. Incoming data on net suggests the US economy retains fairly healthy momentum. Mikhail Jepin, a Bank of America economist, wrote in a client note he said he, che- he cited improving motor vehicle assembly and retail sales data but not declining housing numbers. Okay, maybe that's all from me. Don't forget to like, comment, and subscribe. Don't forget to share too. And see you in the next video.